Hey everyone, and welcome back. Ready for another deep dive?
Always.
Awesome. Today we're going to be looking at Procter Gamble.
P&G, huh?
Yeah, you know them, the huge consumer goods company.
Tide, Pampers, all that.
Right, all those household names. But
Okay.
they're actually running into some issues in China.
Oh, interesting.
Yeah, and we're going to be looking at a Motley Fool article from, let me check, January 26, 2025.
Okay.
It's called, "Is China Dragging Down This Dow Jones Dividend King Stock?"
Catchy.
So it's pretty intriguing, right?
Yeah.
We've got P&G, this giant company, 68 years of straight dividend raises.
Wow. Dividend King, like the article said.
Exactly. So you'd think they'd be unstoppable, but
But there's a catch.
apparently so. Their sales in China, especially in their beauty business, they're not doing so hot.
Interesting. What kind of numbers are we looking at?
Well, their organic sales in Greater China, they fell by 3% in Q2 of fiscal 2025.
Okay, 3%.
Yeah, which, might not sound too bad on its own, but
Right. But it's on top of the 15% decline the previous quarter.
exactly. So it makes you think, right? Like, is this the beginning of a bigger issue?
Yeah, I see what you mean.
Especially when the article quotes P&G CFO Andre Schulten.
Right.
He said, and I quote, "I don't think China is out of the woods."
Uh-oh. Not exactly reassuring.
So that begs the question, right? What's going on in China? Why is this slowdown happening? And what does it all mean for P&G and their strategy going forward?
Yeah, a lot to unpack there.
For sure. It's not just a simple case of, oh, the Chinese economy is slowing down.
Right.
It's actually a lot more complex than that.
It always is.
It has to do with the tastes of Chinese consumers, how they're changing, especially when it comes to beauty products.
Oh, so P&G is kind of trying to hit a moving target.
Exactly. And a perfect example of this is their Olay brand.
Okay, so Olay, what's happening there?
Well, you see, Chinese consumers, they're not so interested anymore in products that just focus on skin tone.
Interesting.
They're looking for more. They want anti-aging solutions, things that offer multiple benefits.
I see.
So P&G needs to adapt. They have to keep up with these changing wants and needs, or they'll get left behind.
Right, makes sense. Consumers' needs and desires are constantly changing, and if you don't keep up, you become irrelevant.
Absolutely. Now, the good news is the article does say that P&G isn't just sitting there watching this happen.
That's good to hear.
They're actually taking steps to address these challenges.
Oh, really? What are they doing?
Well, they're trying to adapt. It's a two-pronged approach, you could say.
Okay, I'm listening.
On one hand, they're focusing on product innovation.
Right. They got to keep those products fresh and exciting.
Exactly. And on the other hand, they're making some changes to their distribution strategy.
Interesting. So it's not just about the products themselves, but also about how they get those products into the hands of consumers.
That's right. They're thinking about the whole process.
Sounds like a pretty comprehensive approach.
It does, doesn't it?
Yeah.
But the question is, will it be enough?
Yeah, that's the big question.
Especially when you consider that China's economic recovery is still pretty unpredictable.
It's like they're trying to navigate through a fog. They have a good map and a skilled crew, but they can't fully see what's ahead.
It's a good analogy.
Thanks.
So is P&G just playing a waiting game, or are there more proactive steps they could be taking? And, what does all this mean for investors who are watching this situation unfold?
Yeah, a lot of people are probably wondering about that.
We'll get into all of that and more as we continue our deep dive into P&G and their challenges in China. Stay tuned. It's a little bit unnerving when you think about it,
What's that?
Like even a company as big and as powerful as P&G,
Right.
they're still at the mercy of these global shifts and changes.
Oh, absolutely. And this isn't just P&G's problem.
What do you mean?
I mean, a lot of multinational companies, they're facing the same kinds of issues.
Especially in emerging markets like China.
Right, exactly.
So it's like a bigger trend then, right?
Okay.
It's not just P&G trying to figure out China.
It's bigger. Yeah. Like global companies are having to rethink how they approach these markets.
Because everything's changing so fast.
Yeah, and consumer preferences are changing too.
In China and everywhere else.
Right.
Yeah.
There's this growing preference for local brands in a lot of places.
Oh, interesting.
People want products that feel, authentic, culturally relevant.
They want something that speaks to them directly.
Yeah, and that's a tough challenge for these big multinational companies.
It's like they're trying to be everything to everyone.
Exactly. And it's not always easy to pull off.
So in a way, P&G is kind of a case study in this, right? It's bigger than just them trying to sell more stuff in China.
Definitely. It shows you how complex things are becoming.
So it's not just about numbers and logistics and supply chains.
It's about culture, about understanding what Chinese consumers really want, what they aspire to.
And how those aspirations are changing.
Right. And you also have to factor in those local competitors.
The ones who already have a good grasp of the Chinese market.
Exactly. They have an advantage in that sense.
So P&G has its work cut out for it, that's for sure.
Yeah. They've got to be smart about how they adapt.
Well, we talked about some of the things they're trying to do, right?
The product innovation, the changes to their distribution.
Yeah. Are there any specific examples from the article that really show how they're trying to, adjust to this new reality?
Oh, for sure. I think the Olay revamp is a good example.
The Olay one, okay.
It shows that they're really trying to understand what Chinese consumers are looking for.
And we talked about how it's not just about skin tone anymore.
It's about more than that now. They want anti-aging, multi-benefit products.
Things that do more than just one thing.
Right. Efficiency and effectiveness, that's what they want.
And P&G's recognizing that.
They have to. It's not just about changing the label on an old product.
They have to understand what's driving those choices.
And then create products that actually meet those needs.
So it's like a deeper level of, customer understanding.
Yeah, exactly.
And this isn't just happening with Olay, right?
Nope, it's across the board. The article mentioned Pantene and Head & Shoulders, too.
So even those big established brands, they're having to adapt.
Everyone has to. It doesn't matter how big you are.
You snooze, you lose.
Basically. So yeah, P&G's definitely trying, but it's still a big question mark,
It's because of the whole China recovery thing.
Right, that uncertainty hangs over everything.
So how can investors, or anyone really, make sense of all this? How do you weigh the good against the bad?
It's tough. But there are some things to watch for.
Like what?
Well, first, look at their sales numbers in China. See how they do over the next few quarters.
So track the data, basically.
Yeah, but don't just look at the raw numbers. Pay attention to how P&G talks about it, too.
During their earnings calls and all that?
Right. What's their tone? Are they optimistic? Do they seem confident?
It's like reading between the lines.
Right, exactly. Look for those subtle clues about how they really feel about things.
So we're playing detective here.
A little bit, yeah.
And we can't forget about the bigger picture either, right?
Oh, absolutely not. The global context matters a lot.
Because what happens in China doesn't stay in China.
No way. It's all connected. Global economy,
So even if P&G does everything right, there are still these outside factors they can't control.
That's always the risk, no matter where you're doing business.
So what are some of those specific external factors that we should be watching for?
Well, keep an eye on the overall economic data coming out of China. GDP growth, consumer spending, retail sales, things like that.
To get a sense of the overall health of the Chinese economy.
Yeah, exactly. And pay attention to anything about changing consumer preferences, too. Are there new trends emerging? Are local brands gaining more traction?
It's like you're constantly scanning the horizon, looking for potential storms.
That's a good way to put it.
Yeah.
And then there's the geopolitical stuff, too. Trade tensions, currency fluctuations, changes in government policies, all of that can impact a company like P&G.
It's like they're sailing through a channel with all these crazy currents and unpredictable tides.
Haha. Yeah, that's a good analogy.
So basically, P&G needs to be both flexible and adaptable.
Big time. They've got to be able to respond to all of these different forces, both internal and external.
And that's what makes this whole situation so interesting to watch, right?
Totally. It's a high-stakes game, for sure.
It's like watching a chess game, You've got to think several moves ahead.
You're on fire with the analogies today.
Thanks. I'm trying to keep things lively.
You're doing a great job. But seriously, it is a strategic challenge for P&G. They've got to have foresight, and they've got to be able to adapt quickly.
So we've covered a lot here. We've talked about P&G's efforts to adapt, the uncertainty around China's recovery, the whole global context.
It's complex stuff.
But for investors, it comes down to one question. Is P&G still a good investment?
$1 million question.
And I'm really hoping you have the answer.
I wish I did. But look, even with all these challenges, P&G is still a solid company at its core.
Strong fundamentals.
Exactly. They've got a great portfolio of brands, global reach, and a long history of navigating tough markets.
So that's all good news. But investors can't just ignore those challenges in China, right?
Right. You've got to weigh the strengths against the risks.
So it's about finding that balance.
Yep. Looking at both the positive and the negative.
Because investing is about managing risk as much as it is about making money.
Absolutely. And even with a company like P&G, there's always some level of risk.
Nothing's guaranteed.
That's for sure. But on the other hand, remember, P&G's still a dividend king.
68 years in a row, those dividend increases.
It's an impressive track record. And their current dividend yield, 2.4%, that's more than double the S&P 500's yield right now.
So there's still a lot to like about P&G, even with all the uncertainty.
Definitely. But it's crucial for investors to do their homework, understand the risks, understand the potential rewards.
That's where this Motley Fool article comes in handy, right? It gives us that valuable context.
It's like a guidebook for navigating this whole situation. It doesn't tell you exactly what to do, but it gives you the information you need to make a smart decision.
Great analogy. I'm getting good at those now, thanks to you.
You're welcome. But seriously, investing is more than just chasing returns.
It's about understanding the world around us, the forces at play.
Exactly. And making informed decisions based on that understanding.
Well said. And that's really what this deep dive is all about, right?
Trying to equip our listeners with knowledge and insight so they can navigate this complex world.
And in the case of P&G, I think we've uncovered a lot of interesting stuff.
It's been a great exploration. But there's still one big question hanging in the air, you know?
The big one.
Will P&G's efforts be enough to turn things around in China? Or will they have to rethink their whole strategy?
Good question. That's something we're going to dig into in the final part of our deep dive.
Buckle up, folks. We're going even deeper.
All right, so we've talked about the challenges, the adaptations, the whole China situation.
It's a lot to process, right?
For sure. But it all boils down to one question. Will P&G's efforts be enough?
Yeah, will they succeed in China? Tough to say for sure. No crystal ball here.
Right. But we can at least, play what if, right?
Yeah, let's explore some possibilities.
So what's the best case scenario here? Everything goes right for P&G.
Okay, so imagine this. They're new products. They're a hit with Chinese consumers.
They nail it, basically.
Yeah, and their distribution changes, they work perfectly, they get those products everywhere.
Wider reach.
Exactly. And on top of that, China's economy, it bounces back strong.
So a perfect storm, but in a good way?
Exactly. Internal success, external factors all lining up.
In that case, P&G could really come out on top.
They could regain that lost ground, maybe even grow faster than before.
That's the dream scenario, I guess.
For sure. But, there's always the flip side.
The less rosy picture.
Right. What if things don't go so well?
What could go wrong?
Well, maybe their product changes, even though they tried, they just don't resonate with consumers.
They missed the mark.
Yeah, it happens. Or those local brands, they're more competitive than P&G expected.
They're tougher to beat.
Right. They're nimble, they understand the market, they can adapt quickly.
It's like they're one step ahead.
And then, of course, there's the whole China recovery thing.
Yeah, we can't forget about that.
What if their economy doesn't bounce back as quickly as everyone hopes?
That would throw a wrench in things for sure.
Absolutely. P&G could do everything right, and it still might not be enough.
So it's like a double-edged sword.
Kind of, yeah. They need things to go right, both inside the company and outside in the broader market.
A lot of factors at play here.
It's complex stuff. And it shows you how important it is to look at both sides of the coin when you're evaluating an investment.
Right, not just the company itself, but also the context, the bigger picture.
Exactly. It's all connected.
Wow, this deep dive has been a real eye-opener.
I agree. We've covered so much ground.
Started with that one article about P&G in China, and look where we ended up.
Talking about global trends, investment strategies, the whole shebang.
It's amazing how these things connect.
And hopefully our listeners got something out of it.
Some food for thought, right?
At least that, and maybe, just maybe, a better understanding of how the world works.
Well said. So as we wrap up here, what's the one big takeaway you want our listeners to remember?
Let me think. I guess it would be this. Knowledge is power. Even in a world that's constantly changing, knowledge is what helps us make sense of it all.
Make smarter decisions.
Whether we're investors, consumers, or just, people trying to navigate this crazy world.
Couldn't agree more. Well, thanks for joining me on this deep dive.
It's been a pleasure.
And to all our listeners out there, thanks for tuning in. We'll see you next time for another deep dive into the world of business and finance. Until then, stay curious, stay informed, and stay awesome.